Good morning, everyone. This is Kathy Lean. If you can hear my voice, see my screen, please say hello. Let me know you are hearing me and seeing me well. Let me know on the chat. Say hello. Can you see me, hear me? I know many of you are joining the room already. Good morning, Lei, Doc. Are you my friends from Vietnam? My family is from Vietnam. Please let me know, where you're coming in from and what part of the world you are. Great. I'm so glad that it's loud and clear. This is wonderful. This is exactly what I want to see. All right. So we already have a really good group here. And so I just want to go ahead and get started because I have so much to share with you this morning. Give me 1 second to share my screen and set that all up. Okay, that's the screen that I want to share. Let me just share screen. Okay, fantastic. So right now you should see my screen. I'm going to make this really big, but actually this is not what I want to show you first. The first thing, whenever we trade non-farm payrolls, it's very important to talk about expectations. But before, I begin, I'd like to ask you, how many of you trading Forex and how many of you trading indices this morning? What instruments are you trading this morning or you're looking to trade or typically trade ahead of these big events like non-farm payrolls? Go ahead, chime in. I'll look at it while you are talking.
Hey guys.
Hi, Boris. Sound check is going well, so that's good.
Okay.
So I will be trading Forex and Boris. So what typically happens is I come in, we set up our trading plan. And then, we start off by trading Forex and then Boris will roll into live trading. We'll roll into live trading the indices. So that's, the initial trading plan. He'll be looking at opportunities in Nasdaq, S&P, gold, all that stuff. But before any of that happens, it's important to think about, what the market is looking for. What are the expectations? Because that helps us determine what we're going to trade. And that is why I always say, we've done this month after month, data after data. Let's create a plan. Let's trade the plan. So
before we start, I put up a poll for everybody. The forecast is 150,000 jobs today. I'm curious what you guys think. So put up whether you think it's going to beat or be worse than expected. Let's see what everybody thinks ahead of the report before we start. So I'll let Trey.
Is it 150,000 jobs?
That's the forecast.
It's 140. No, it's 142 according to my FX book, which is just marginally higher.
The previous was 142. The forecast is 150 according to
financial juice. Forex factor is 147. So I'm not sure where the 150 comes from.
From financial juice. I'm taking it from financial juice.
Okay, well, we're basing it off the calendars. So it's basically the bottom line is the market is expecting only a marginal improvement from the previous month. Everyone's expectations are different. There's usually these expectations come from Bloomberg, and they surveyed a whole bunch of Bloomberg economists to come up with these expectations. But what you can see is that the market expects the job growth to just be marginally higher than the previous month. And the reason why I, really question Boris on this is because the expectation is so close on my FX book. It's pretty much unchanged. On Forex Factory, it's a little bit larger, 147. It sounds like financial juice is looking for an even larger one. So you got to take it somewhere in the middle. Pretty much it's going, look, the market is expecting it to be in line with expectations. Average hourly earnings growth is expected to slow. The unemployment rate is expected to remain unchanged. Now, many of you have traded with me. Many of you have traded by yourself, non-farm payrolls. You may know that more often than not, it is going to surprise. There's a very, very little chance that it's going to come in right in line with expectations. There's very, very little chance that it's going to come in right at 147 or 142. And there's a very good chance it's going to be 10K up or down from expectations. This is just non-farm payrolls. It's what happens. It's a very volatile number. What that means is that someone is bound to be surprised. Someone, either on the long side, the short side is going to be surprised because everyone is zeroed in on these expectations. And because they are zeroed in on these expectations, it's either going to be strong. It's not going to be right in line with it, or it's a very, very slim chance that's going to be right in line with it. So it's either going to be stronger or weaker. And because no one really knows, it's bound to be a surprise. It's bound to be, a big movement. And that's why I had this up for myself in the beginning. And I want to share this with you. So every month before non-farm payrolls, what we always like to do is we always like to show you what non-farm payrolls leading indicators are stacking up at, what non-farm payrolls could potentially surprise to the upside or to the downside, basically showing you what the potential surprise could be. So just at first glance, I'm sure you can see there's a little bit more green than there is red, right? Just a little bit, not overwhelmingly so. Sometimes we have almost all of them green and just one or two red. Sometimes we have almost all of them red, some a little bit more green. So let's just look at these really quickly in detail. So ADP is favoring, ADP rose to the highest level since June, 143,000. Challenger reported fewer layoffs. UMich, strongest sentiment since May. 4-week jobless claims lower, continuing claims lower. So, private sector payrolls was good. Challenger has fewer layoffs. Those are the reasons why we could see a stronger payrolls report. Now, the case for weaker payrolls is ISM services actually beat yesterday. But even though ISM services beat, ISM, the services jobs, the employment component actually missed. The employment component came in weaker than expected. ISM manufacturing jobs also came in weaker than expected. And I believe, correct me if I'm wrong, I'm going to move this over here, that yesterday's, where's the calendar? So many ads on my FX book. Hold on. We're going to go to the economic calendar. I believe it dropped below 50 is what I'm trying to get at. Let me just pop over to yesterday's ISM number yesterday. So yesterday's ISM, I don't even know what it wants. Yes, it dropped to 48.9. So when it's below 50, it means that that there are job losses and not job growth in the service sector. So what this is telling us is that service sector lost jobs, manufacturing sector lost jobs, and consumer confidence index, which kind of offsets the UMich survey, dropped. And I made this before they announced the dock worker strike ending last night or this morning. So that's no longer a problem. The dollar is catching a little bit of a bid in some ways because traders are relieved that that's not going to put pressure on jobs next month. So yes, the case for non-farm payrolls, there are far more green than there is red, but the red ones are really important. We have a drop in service sector jobs and a drop in manufacturing jobs. So for me, that is a little worrisome. That is a little alarming. And if we look at non-farm payrolls itself, let's see if we can eliminate this big bump up here. You can see that last month was actually an increase. The last month was actually an increase from the previous month. So the September report was stronger than the August report. But the leading indicators for non-farm payrolls suggest that it should be weaker. So I got a question from Patrick here. Which one would carry more weight, ADP or ISM? 100% ISM. Now, of course, every month could be wrong, but 100% ISM. So now let's talk about, we know that the market's expecting job growth to pretty much be the same. And we also know that that's not going to happen. We know that, NFPs always surprise in one way or another. I'd be shocked if NFPs came in line. If NFPs came in line, I actually think that's dollar bullish. And I'll explain that in a second. But NFPs is so volatile. You get a revision the previous month. You can have a big surprise in the headline number. Average hourly earnings growth could change. Unemployment rate could change. All of that is the reason why we always trade non-farm payrolls reactively, not proactively. Always after the report and not before the report. So let's talk about, our trading plan. And part of the reason why, if non-farm payrolls comes in at 147, which I highly, highly doubt it will, right in line. If it comes in non-47 with 4.2 and 0.3, I think it's actually going to be a little bullish for the dollar. And the reason why I say that is because of this. This is dollar yen. This is my zip chart. And you will see that right now, zip is in the buy zone. We have 3 positive zip buy signals. And the background's green. The currency pair is trading above the indicator line. Regardless of whether you understand this or not, the point is investors are buying dollars ahead of NFPs. They're buying dollars against the yen. They're kind of buying dollars against the euro. They're buying dollars certainly against Aussie, Kiwi, and even to a little degree CAD. So they are bidding up the dollar. So if the US data is strong, then dollar yen is already in the buy zone with 3 triple zip buy signals. So on strong, and I like to do this here. Hold on. On let's just a stronger NFP, we're going to be looking to buy dollar yen. And the other currency pair, the weakest currency pair is Aussie and Kiwi. It's really Kiwi. But the reason why I like Aussie to the short side is because it's rolling over in the daily charts. And it looks like it has a lot of room to go. There's no major moving average support below these levels. Kiwi is the same story, but Kiwi's already kind of moved a bit. So where's my dollar yen chart? So we have a good number. We're going to be looking to buy dollar yen, sell Aussie dollar, sell Kiwi dollar. All right. Kiwi has more of the fundamentals than Aussie. If we have a weaker non-farm payrolls report, and that can come in many forms. It could come in the headline number, or the headline number being right in line with expectations, and average hourly earnings growth slowing to 0.2%, or the unemployment rate rising. All of that can make it a dollar negative number. If it is a dollar negative number, then I think first off, dollar Swiss is definitely weaker than dollar yen. Dollar yen will probably work, but I can't spell. I'd be looking at selling dollar Swiss. I'm also kind of interested in euro. Euro's been flatlining here since Wednesday. And so if we get a weaker US number, we could see euro dollar above 104. And if we look at, the moving average charts, you will see that, the daily chart still looks quite bearish. The 4-hour charts look like a potential basing. I just feel like euro's kind of basing at least all the levels. But it's not very, very clear. So I think, basically it's going to be dollar CAD, which is in the buy zone. And if we look at dollar CAD on the daily chart, we've got a lot of room to move up to 136. So our trading plan is going to be plus dollar Swiss. And of course, we'll see what dollar yen's doing. Dollar yen, actually I missed that. So this is going to be, so if we I'm going to add this to the dollar, this here. We're also going to look at plus dollar CAD. But if we get a weak NFP number, it's going to be short dollar Swiss. And then probably, we'll see. Maybe we'll have an opportunity in dollar yen as well. But dollar Swiss is definitely my preference. I'm going to see if euro dollar zips buys. If it zips buys, we could do that. Pound dollar is the strongest, but, I hate trading the pound dollar. Okay, so that's basically going to be our game plan. And, let me see if I can copy this. Hold on. Copy this, and I'm going to move this over here. Paste this over here. Okay, it didn't like me doing that. It's fine. All right, so these are the pairs that we're going to be looking at. and we will see, what's the opportunity. For those of you that are trading gold, Boris will be looking at gold opportunities after the number. Typically, the way we work is that, we come and talk about our trading plan, and we'll see it in the price action before we actually see it in before it actually hits the news. But Boris will try to scream it out to us. Then, I like to put on some initial trades, and then Boris will come in, and, NFPs usually oftentimes has continuation. And remember, there's one more NFP report before the next meeting. The other thing I really wanted to show you guys is that we're going to announce this tomorrow, but we recently partnered with Think Capital. And Think Capital actually is a prop firm that trades Forex CFDs. And they actually allow you to trade right off of the TradingView platform. And one of the really cool things, and this is my chart here from Think Capital, one of the really cool things I want to show you is the calendar function. And we'll look at this again. On the calendar function, if you look at non-farm payrolls and you click on volatility, you can actually see, it's so cool. What is the average movement of each of the major currencies? 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours after the event. So in the first, let's say 15 minutes in dollar yen, last month we had about 89-point move. And the month before, we had a 178-point move in dollar yen. In the euro dollar, and with non-farm payrolls, we only had about a 40-point move in the first 15 minutes. So that's part of the reason why it tells us that dollar yen is really going to be on the move after NFPs. We also said, okay, we're going to consider trading dollar Swiss. Dollar Swiss is definitely a little bit more active in the last 2 months, which I think is kind of closer to this month than euro dollar, because dollar Swiss has a little bit of vol. The other currency that was on our radar is Kiwi dollar. Let's see if we can find Kiwi dollar. Where is, I saw it earlier, Kiwi dollar. So Kiwi dollar, okay, muted move. So at least not in the first 15 minutes. But what's really interesting is that if we look at the first 15 minutes, at least July, August, we had like no movement. September, we had about 40 pip movement. An hour later, it continued on. What does this tell me? This tells me that Kiwis is, maybe we won't be trading Kiwi. Kiwi is more of a currency pair to hide in. It will, if we're going for 10, 15 pips, it's going to probably work, and it's going to be slower, lower volatility than dollar yen, which will move quickly and aggressively. So all of this is telling me that euro dollar, dollar Swiss are going to be slower movers, and they're being more orderly in terms of movement than Kiwi dollar and euro dollar, even to some degree. But if I want something that's not hyper volatile, then I might want to opt for euro dollar. But it's so cool. There's so much information that you can get here from the Think Capital platform, and that's just one of the benefits that you get by getting your prop account, Forex CFD prop account with Think Capital, because they are powered by Think Markets, and so you get everything. And even US traders have access to this. This is the only, as far as I know, and correct me if I'm wrong, Boris, this is the only broker-powered platform offered to US traders. And we all know how much trouble these US traders have, US platforms have had. Being broker-powered is definitely an advantage, because they're not going to want to risk their, reputation on any of this. So we are a minute away. Let's go to our charts, what we really care about trading. We're going to talk more about that later. Boris dropped a 10% discount code with Think Capital. We're really selective with the prop firms we choose to trade, we choose to partner with. And there's so many features I'll talk about later on Think Capital that is really cool. All right, so NFPs, we know 145 is about expectations. Boris, do you have your swap class open?
Yeah, hold on. Let me put it up. Just 1 sec. Let me share my screen for a second.
As I said, we will see in the price action before we see it in the data. I'm just going to scream it out. I like 20 pip stop, 20 pip target for the day trades.
5 seconds left. I'm sharing the screen. 150.
So once again, I like 20 pip stop, 20 pip target. Oh, 147 buy dollar yen, 147. Oh, let's say 20. Okay, 147.
Oh, the big fit, the 154 on the payrolls, 4% earnings.
Okay,
Really,
dollar yen already out. So I said one buy for dollar yen, 147.20 already. 40 pips movement.
very, very positive payrolls. Really, really strong. Much stronger than
Okay, so I
expected.
think there's going to be continuation. I think we're going to have additional movement. So it's just a matter of getting back in. And we have strong NFP, so we're just going to zero in here. I think this one's going to hit the round number. So let's give it 135.70. Let's see. Okay, it's retracing. So you can see dollar yen is the one that's not moving, not retracing as much. All right, 60. Let's do 65 dollar Swiss long. Dollar Swiss long at 85.65. This is now we're hiding in this one because it's obviously not going to move as fast as dollar yen. I still like dollar yen to the upside. We got hyper volatility there. I also like dollar CAD to the upside at, I think it's going to hit the round number. CAD loves to hit the round number. I think getting it at 77 could be a good trade. But dollar Swiss and dollar yen 89. So number is strong all around. I would go long 89 and dollar yen. And I think we're going to get a good movement here.
I'm putting up Kathy's charts right now because we're not going to trade for a little while, but I'm just sort of using my indicator on Kathy's charts just so you guys can follow the price action.
Oh, let me just share my chart. Okay, so dollar yen, we had caught that initial move. We're still looking for a movement higher in dollar yen. We're long at 89. And, we're going to go close it right here at 09 plus 4 plus 20. Closed at 148.09 for plus 20. And it keeps going. I always take profits sooner than what the market gives me. But, dollar yen is really the mover. Dollar Swiss isn't really moving that much. I think I would just square it. We'll see. Now it's starting to move a little bit. But I think I'm going to close it here at, is there resistance? Let's see. Dollar Swiss. I'm typing into, there's no resistance on daily 4 hour. Okay, we still have quite a bit of room to go. Dollar yen really is the power mover here. So we're still long dollar Swiss. So we got 20 pips in dollar yen just now. The first dollar yen trade could have been an easy 20 to 40 pips, depending upon what you took profit at. It just shot up to the moon. Dollar Swiss, we're still long. Let's find resistance in dollar yen. This is a good time to talk about that. Now, first resistance, obviously 149.30. Let's see if we have any bigger resistance moves. Not from there. It looks like, it's looks pretty good. I think retraces should be bought. I would go long at 25 for a swing trade with a big stop maybe. I'm going to see, I might put that in our swing trade room for our BK traders. Hold on. Sorry, I'm snapping into my other chart. So we went long at 148.20 for our swing trades. Now swing trades have 40 pip stop, 40 pip target. So it's pretty big moves. And so, this is where I like to put my trades, where we like to have a little bit more leeway, where we basically need more breathing room. So, these are the trades where, these are the trades where we want to go. I had a typo there. Hold on. All right. So where are we at? Dollar Swiss is moving upwards. I'm going to come back to you in just a second. I'm actually trading for our BK members as well. All right. Dollar Swiss is moving upwards slowly. And it's not really going that much. I don't love that's not going that much, but I think we have a move or stop to break even at 85.65. So we're not risking any profits we've made in the $2 yen swing trades that we came in right now. We're still going to be looking to buy dollar yen, but let's see if we have any shorter. We are long already on a swing trading basis, but I'm going to see if we looks, I mean, that pullback was so fast, I couldn't even get back in. So we're long at 20 for our swing trade. And I'll show you this. Where is it? Hold on. Okay. So we went long here. If you can see it here, we went long at 143.20 with a 40 pip stop, 40 pip target for our swing trade. Day trade, you know, I want to see a little bit more of a retrace. I don't know if we're going to get it or not. But look, dollar Swiss is really rock and rolling, 76. I'm going to close it for 10 pips here. So we made 10 pips on dollar Swiss, 20 pips on the most recent dollar yen, minimum 20 pips on the very first reactive trade in dollar yen. And the two trades now that I'm looking at is I think dollar CAD is going to hit the round number. Let's see where it is. I am not long dollar CAD, just so you know. I'm going to take a quick look at the charts. I didn't want to get distracted. We have a little bit of resistance at 83. I think, you know, dollar CAD really likes to hit the round number, but, you know, I'm not going to do this because oil prices have been very strong. So we're going to stick with just the dollar yen swing trade and see if we have an opportunity to come in right after that. So, you know, dollar yen, the magnitude of this move was how much? 50 to pretty much 50, 100 points. Euro dollar had a pretty big move. We stepped aside from euro dollar because, and actually this is a good one because of the most recent EU tariffs. 110.35 to 110.65. So basically a 70-ish, 70, 80 pip move. And I want to talk about that in a minute. But what I want to say is that euro dollar has been a slower mover and it's been a little tougher, but I still like it to the downside. I think 109.81 could be a good opportunity to sell. Let's see if we have, I haven't put on a trade yet. So see, we have fib. Ooh, look at that. Fib support right there. We don't like that. So fibs are important. So I don't like this fib. Maybe on a little bit more of a retrace, but I don't like that fib at all. So dollar yen still looks like the highest quality trade right now. And if you're looking for a swing trade re-add, I don't see any levels, quite honestly. It's either right here or it's not. Which is why I prefer the day trade. Kiwi dollar, which we talked about getting into. Let's see what happened. Kiwi dollar, it was 62.04, 61.60. So 40 pip move. So, you know, going back to the data here on the Think Capital platform, you can see that where's this non-farm payrolls? That, you know, I guess with the volatility chart, you know, you really do have, dollar yen. We saw what you're looking at. What currency pair should I be trading? And if you want a big fast move, dollar yen, it told us 89 pips is the average first 15 minutes. Are we 15 minutes past yet? Not yet. In the first 5 minutes, it has the biggest move. So actually what's interesting is last time, 74 pips in the first 5 minutes. 88 pips in the first 15 minutes. So that means that we only added 13 additional pips. But what about the rest of the day? Can we hold on to this trade for the rest of the day? So remember, the initial move was 80-something pips in the first 15 minutes. And then the rest of the day, it moved 190 pips. So that tells us dollar yen is very, very nice continuation for the rest of the day, which is also another reason why I put on the swing trade. Because I'll admit, I looked at all this stuff before I talked to you. So I actually had a preview of all this. So I looked at all this stuff before I talked to you. And I knew that, and also from experience, you know, these numbers show experience that that dollar yen oftentimes on Fridays will have very, very nice continuation after the data. And that it'll carry over because, you know, it was, like Boris said, overwhelmingly positive. Non-farm payrolls, it was 254,000, 100,000 more than expected. Previous month, revised upwards. Unemployment rate dropped. Average hourly earnings growth higher. They're making more. They're getting more jobs. This is really good for the Federal Reserve, who has been calling for only 25 basis points of easing in November. And at this point, even if we get a weak NFP next month, this is so strong. I don't think it's necessarily going to support the case for 50. So dollar yen should very much have continuation. I like buying it on a day trading basis too, at maybe even 16, 17. I would like to see, maybe this 1 minute candle close green before we get in. But I think this is a very, very strong number. So maybe we'll try another again on a day trading basis. But I'm happy with our swing trade on a swing trading basis. I think that, we should have some nice continuation. If we don't, we're still going to get in. But I do think that this number is very significant for the Fed. And I think that, it's definitely going to be supporting the yield move, which is up 2.3%. Look here, 2.3% yield move. And then also the Fed, everything, I think it's, everything tells me that this is going to be, that next week we're going to see the dollar higher, not lower. All right, so I think 07 is a good place to go long dollar yen for a day trade. We can probe that. I like that for a day trade. 148.07. Maybe it'll work. Maybe we won't. If it drops below 148, I would put my stop at 147.99. So a tight stop. And see what we get. Because if it goes below the figure, we're wrong. And if it stays above it, we went long at 148.07 for a day trade. We'll see how it goes. But we still made a lot of money in the initial long dollar yen trade. I'm up at least 50 pips. And the first one moved a lot more than, than I was looking for. So it definitely was a big mover. So, it definitely looks pretty good. Let's see, 15, 18. So, all right, I'm closing here for plus 10. You can probably hold on for a little bit more, but obviously we still have the other swing trade. So we're going to keep that on. We closed dollar yen at 148.07 plus 10. So added another 10 pips here. And this is how you use, we had a plan and we traded the plan. Remember, my sloppily written good US data, these are the ones that we're trading. But you have a plan that creates clarity in your mind. Look at 22, 21, 22. It went a lot more than I took off the table. But we had a plan. We traded the plan. And when you have a plan, it creates clarity of mind. You know exactly what to do. Because we talked about it. We had the plan. We traded the plan. Just so you know, we're going to be live trading US CPI also next week. Just check the YouTube live stream. Also, we create our plan on Monday. So join us for Monday morning game plan. Boris is going to take some trades with you. And, definitely consider, our checking out Think Capital. Think Capital is available for U.S. traders. It's a classic prop firm that trades Forex, CFDs. You saw my really cool Think Capital platform with looking at the data. Other cool things they have trading signals. I don't know what these trading signals are from, but you can read through it and get some ideas for the different instruments. They have a back testing simulation that you could do. These are things that none of the other platforms have. And you have the confidence that they're powered by one of the major brokers around the world, the regulated across jurisdictions. Now, Think Capital is a different company, but they're powered by Think Markets, and they don't, obviously, a company with a big name like this doesn't want to risk its reputation with and they're not a fly-by-night firm like all the prop firms that are just blowing up. So, there's a lot of advantages. That economic calendar thing that we use is really cool. You can trade right on TradingView. You can trade right over here. Pretty much same terms as everyone else. Boris has dropped our exclusive 10% discount there. And if you join them, we will also, give you a free prop trading guide. Email us. Boris has got a free gold EA as well. Just as part of our first month launch with Think Capital. So definitely check it out. There's no time limit. So you can buy a Think Capital account and hold on to it and when you're ready to trade it.
Yeah, I also, I believe, I'm going to double check this, so I don't want to speak out of my mind, but because they're
don't. Unless, what do you want to say?
I was going to say that because they're trading view, we might be able to apply all of our proprietary indicators.
No, I don't think you can do that right now. Because it's something I've looked into and I've talked to them about, but it's not, necessarily.
It's not possible. Okay, so for now we can't. But still, very, very cool platform. We'll be able to do lots of interesting things with it.
And it's available for US.
It's available for US, and also it's available for, there are a lot of people in the emerging markets customers that we have from Africa and everywhere else that may not be, have not been able to kind of take the prop challenges on the future side. This will absolutely allow you to take the prop futures. These guys will onboard you. So for those people that wanted to get prop trading but couldn't quite access prop capital, this one will be available to globally up to everybody across the world.
And also, what I want to say is that for everyone else across the world, you can use MT5, which everyone loves, which is great. So you can use TradingView or MT5. The other thing I want to mention is that I want you to notice, this comes from experience. This comes from looking at the data that we just saw on Think Capital platform on how data moves, how the currencies move after the data. Dollar Swiss is a slow mover. Dollar yen is a fast mover. We saw that, right? I mean, if we look at we go back to the calendar, you saw that. So remember, I dropped this and I said it really quickly that certain currency pairs are good to hide in when you're trading the news, meaning that you can still take advantage of the initial movement. Let's go 5 minutes after dollar yen, then 140 pips in the first 5 minutes in August, 75 pips in the first 5 minutes in September. Dollar Swiss, it had a smaller move, 50 and 40. But if you look at 1 hour later, it continues on as it's still a smaller move than dollar yen, but it's a straight line with less retrace. So there are pairs that you want to trade for the exhilaration and the speed, which is fantastic for live trading, like dollar yen. And then there are pairs that, and you saw that we put dollar yen on first, and then we put dollar Swiss on second, because dollar Swiss is a much slower mover. And knowing how how each currency pair performs around each piece of data is critical to trade selection. And so when we look at the US inflation report and how we're going to be trading the US inflation report next week, I'm going to be referencing back to these tables, and we're going to look at the price action, the potential moves, and we're going to talk about the opportunity. So, it's definitely a really, really valuable tool to have at your disposal. So, we used it today, but most importantly, we had a plan, we traded the plan. And, the day trades, we are up, 2, 4, 60 pips minimum on our day trades. The first one was a huge mover. I mean, look, the first one, I said 20 pip target, 20 pip stop, but regardless where you came in the first minute, what is this? 146.70 up to 147.98. So 110 pips. So I'm sure many of you, regardless of where you came in, got a lot more pips than I did. So this is how, we live trade the data. Why did CAD shot up? Are you talking about dollar CAD? Dollar CAD shot up because it's pro dollar. Look at US yields, 2.3%. This is what I want to talk about on Monday. So please join us for a Monday game plan webinar. And that's on YouTube, on X. We're pretty much at 4%. 4%, that up from 3.6 in September. That's 40.
Big move.
That's basically almost 2 interest rate. This is almost erases. It definitely erases 1 interest rate cut by the Fed. So the Fed did 50 last month, right? So it definitely erases 125 basis point rate cut. And maybe it'll raise 2. I don't know. First of all, it definitely guarantees that the Fed's going to do one more easing, is going to ease in November. It guarantees that they're going to be dovish. And depending upon how things go, right now, things look like it's 25. I don't think, unless the inflation report comes in really weak next week, I don't think there's justification for 50, but we'll see. So I'm getting questions. What is this indicator? This indicator is my ZIP indicator. And Boris, if you don't mind putting in the discount link for ZIP, Also, by the way, everyone sign up for proptraderedge.com, our newsletter, because we have a lot of great trading tips there that's not as related to prop, not related to prop. Definitely sign up there.
I also put up a free link to our prop trading guide, a 66-page guide to prop trading. You can sign up to Prop Trader Edge and get the guide, get everything for free. I put that in the links as well.
And I'm going to throw in something here, which is that if you purchase a Think Capital account that is at least a $50,000 challenge. It could be 1 step, 2 step, their Nexus, they call it different things. We'll give you 1 month access to my indicator and Boris's indicator. Just screenshot the purchase, email us at contact@bktraders.com, and we'll activate you, because we're so excited about you guys trying all these cool new tools that and trading off of the TradingView chart. So you get our prop trader guide, as well as you get to look at these data movements alongside me. You get to trade on MT5 on TradingView. We get our indicators for 1 month to try. A lot of cool reasons to join to try Think Capital with that link that Boris popped in. It's a Forex CFD prop firm. It's the only one that we're partnering with in the US, because it's a strong company. We took a very long time to decide who we want to partner with on Forex CFDs, and we selected them because we really like them. By the way, dollar yen 149.50 pretty much. I'm gonna remember I went long at 147.20 for our swing trades. I'm gonna take off 30 pips here, or you have 2 choices. Remember here. Our swing trade, 143.20. We went long, and our target is 143.60. I'm going to take it off here. It's up to you, BK members, if you want to stay in. If you want to, I just realized I had the big figure wrong. Whatever, it doesn't matter. My intention. But I want to close for 30 pips here at 148.52 for 30 pips. You could go to break even, but I don't, and go for the full 40, but I don't think that it's worth it. We're going to close here for 30 pips, which means that look at these swing trades this week. We're up 183 pips on our swing trade, and on our day trades for ZIP, my ZIP indicator. I can tell you that we are, plus today's day trades, up 194 pips. Day trading 183 pips, swing trading, that's almost 400 pips of profits this week. Using triple zip, 1 zip, 2 zip, 3 zip. So, become a BK member with our discount link. Also, if you don't want to trade prop, Boris is going to drop in an 8-cap link and you're not in the US, you can just open up and fund an account with 8-cap. We will give you access to everything we do, all of our indicators for free, along with my trade ideas as a bonus. If you are a US trader, like I said, you can open up. You can get a CFD Forex prop trading account with Think Capital and get free access to some of our up to ZIP, as well as what Boris will go ahead and show you now. Any questions? I hope you enjoyed it. We made a lot of money. 30 pips in the swing trade, 60 pips minimum in the day trade. That means that with me, you've made is it even like 2, 4, 6. That means that we made 2, 4, 6, 90 pips day trading NFPs with me this morning. So this is what we do every single day. We don't day trade news, but we trade every single day. We have a plan. We trade the plan. Come join me to set our trading plan for the week on Monday. We'll talk more about, how to, it's all about taking the time to create the plan and to talk about the plan for the trading week. So make sure you join me on Monday to create the plan, 8:45 New York time. Also, the inflation report, I think it's on Thursday of next week, if I'm correct. Whatever it is, we're going to be live trading U.S. inflation. It's going to be a huge one. And once again, we're going to create the plan. We're going to trade the plan. It is on Thursday. So, we're going to do it methodically, and we're going to execute according to our plan. All right, Boris, Everyone's asking about gold. Let's talk about gold.
Yeah. Okay. Let me pull up my charts. Give me just 1 second, because while Kathy was talking, I was actually trading. I didn't want to interrupt her, but I'm gonna hang on a second. What's my present? What's going on? Why can't I show them? Oh, here's my charts. I was like, okay, all right. Okay. So gold. I wanted to talk about. Kathy's talking about trade a plan, have a plan. So let me show you what I did with gold, and we'll do more as the session progresses. I just I don't want to interrupt Kay when she was doing all her trading. So pre-event, one of the things that I kind of wanted to discuss with you is I very often get tremendously good ideas from just trading in my group and trading in chat. Last week, somebody had suggested, in addition to our scalper indicator, why don't we overlay the 200 SMA on it to give us orientation as far as trend structure goes? And it was a brilliant idea. I have actually improved the scalper indicator. It's the 1.9 version is ready for those of you who want to download it. And for those of you who want to try it out, I'm just going to put the link on here again. You can try out all of our indicators for just a month if you wanted to. Discount link is over there. And I'll be happy to share this with you so you can actually see how that works. But the key thing that you see here that I think is fascinating is pre-event, pre-non-farm payrolls. Gold was already negative. It was already underneath the 200 SMA, right? And one of the more interesting, fascinating setups that I've discovered when I've been playing around with this is that one of the most durable signals we can get is the failure of the buy underneath the 200 SMA or the failure of the sell. In other words, we have a buy signal and then it goes red, right? And you can see that just before the, let me pull this up, just before non-farm payrolls, about 5-10 minutes beforehand, we had a buy signal that then failed into the red zone. And I actually took the short over here. It was a super quick, nice, 5 ticks over here trade. 50 points on a contract. It would have been 150 if you did 3 contracts. Just a super fast trade. $50 for 5 seconds worth of trading over here that I took 76.9 to 76.4. Right now, the more conventional way for me to trade, given all of this now, is I want to see us. Now we're underneath the trend. I want to see a sell signal, and then I'm usually going to take the follow-on trade. So sell zone, and then the next red move. So we go from sell zone, green, red, then I'm going to short it, because what's telling you is that there is a follow-on continuity signal after the initial sell burst, right? And especially after gold, there was so much volatility. I was like, okay, we're going to wait. We're going to do this properly. Now, this is where have a plan, trade a plan really comes in handy. You know that my approach is if I take a trade and it doesn't work out because of volatility, I will gladly go back into the trade as long, and this is a key thing, as long as it sets up again. So in this particular sequence, because it was super fast, we had a sell signal, we had a green zone, red zone. So I would have gone short over here, which I did on the first sell signal. But unfortunately, there was so much volatility, it retraced against me, stopped me out. No problem. I kept my cool. And I said, if it's going to go back to the red zone, if it's going to have a couple of buy signals, and then it's just going to start to sell off, I'm going to go short again. I went short again at 3 large, covered it up, nice and clean. Boom, that trade money. So basically, both trades now made money. And now we can look again for a possibility of another sell signal in gold if we go back to the red zone after this kind of a short covering retrace. So what this does is it allows us to pace ourselves, to time ourselves, and to obviously trade the plan as best as we could. Now, on the other hand, same idea on equities, right? So this was uber bullish equities, right? Uber bullish equities. We are considerably higher above the 200 SMA pretty much all morning long. The markets were sort of anticipating positive numbers, right? And here's by the way, a great example of where I love to take the contrary signal. So you have a sell signal that then goes green. Sell signal going green is an incredible above the 200 SMA. Great opportunity for us to get long. Would have been, I didn't take this trade because it was, pre-non-farm payrolls. I wasn't at the screen, but it would have been great to trade. So now what happens? We have the news. We have a buy signal. And now what I'm looking for is the red-green interchange. And it's exactly what we get. We get the red-green interchange. I get long on the green. When it comes to the Dow these days, I don't really trade the Dow that much, but I realized that with the Dow, just like with Nasdaq, I really want to go for short, high probability signals. So I went 5.15, went 31 to 36, got done in a minute and a half, and now we're just waiting for next setups to go. So overall, pre-event, it was quite good, and it definitely. I'm going to take all these things off because so it doesn't pollute the chart. We can look at the chart in a clean fashion.
Actually, I just want to chime in here right now, Boris. I just want to point out, I said this in the beginning, and sometimes I talk very fast, and I apologize for that. I talked about how dollar yen, oftentimes on Friday after NFPs, has very strong continuation, which is why we decided to go swing trade dollar yen. We are only 30 minutes after the report. So we could still continue to see some continuation. But even from 15 minutes to 30 minutes, we've seen the bulk of the continuation. And if you don't mind me, Boris, for 1 second, I just want to show them this again, because it's really, really important to know. So if you don't mind, I'd like to just share my screen one more time.
Yeah, go ahead. It's fine. Go ahead.
I want to show them because I just can't, it's something that's really important to learn. Let me just set this up. I want to show you that this is the Think Capital trading calendar. Remember, look at this. First 15 minutes after the report, we had a 90 pip move in dollar yen, or 88 pip move. 4 hours later, it's at 190 pips. And let's just drop down to see what happens in an hour. In the first hour, so 88 pips to 111. So that's basically another 30 pips. So between the 15 minutes after the data up to 1 hour after the data, so we got another 30 pips. But between basically 9:30 a.m. New York time, which is the New York equity market open, all the way to 12:30 a.m., it had another 100-point move. And I'm not saying that we're going to get a 100-point move in dollar yen from 9:30 New York open all the way to London close. But, what it does tell us, and also from my own experience, the numbers show my experience, is that there is continuation. Once the U.S. equity markets open, we get another jolt of excitement. And we are really seeing that in the movement already. We're seeing this. So, the ideas that we had today, the decision for day trades, decision for swing trades is rooted in stats. It's rooted in experience. It's rooted in looking at these numbers and understanding how they move. Now, 1 month, once again, 1 month does not necessarily repeat the other month, but this is from my experience that, this is how you can look at the information and really understand it. So so dollar yen is continuing to move up. I think that it's going to be a continuation day. So go ahead, Boris. You want to share your screen again?
Okay. Sorry, I got distracted here.
Good job, Lee, for getting back into the NFPs. And there could be a little bit of retrace, but the retraces, particularly in dollar yen, have been very shallow. So take it for what it's worth.
Good morning, USA. Nice to see you. So one of the setups that we could have taken, we just had so many so many opportunities that I didn't get a chance to do it, was we had a same idea in S&P, right? We had a buy, red, green, and we could have gone nice and clean here to the upside on the S&P right here, right? 79, 1 point. It actually made 3 points on the moves here. S&P now is 3 buys to the good, right? So once we get to about 3 buy labels consecutively, we actually start looking for a fade move. And our fade structure, fade means we're going to go against trend, right? This is sort of like our structure. Our fade structure is we want 1 red zone, move to the green zone, 2nd red zone. So a 2nd red failure, that means we're kind of topping out. Sellers try to sell, then the buyers come in, try to buy a little bit, and the sellers come in the 2nd time. If that's going to be the case, the 2nd time tends to be the one where they have highest probability of success. We're going to come in and trade that 2nd failure if we get it. after 3 or more buy signals in one direction. Conversely, on the sell side, if we're underneath there. But overall, you guys see how many nice, clean, easy scalps we have here. Really, in the first 20-30 minutes, we had four positive trades. All of them settled very, very nicely. I didn't even talk about Nasdaq. Nasdaq is actually kind of possibly setting up for a long position for us, because what's going on in Nasdaq here is we have 2 buy labels, right? We're going now into the red zone, green zone. If we're going to get into the greens, back to the green zone, we'll take what's called the follow-on trade, the trade that extends this initial buy impulse. There's one, Nasdaq is always problematic, and and I traded with you guys because I know everybody loves trading Nasdaq, and I hate trading Nasdaq generally, but you have to, as I said, if you're going to trade Nasdaq, expect to get stopped out, expect the volatility, and expect to to fight this tooth and nail to kind of get it to work properly. But if you do it within the plan that we have, it's totally viable. The thing I was going to say is, with Nasdaq, we've had literally a move of 65 to 200 point move. 200 point move is really, really significant move, but it's still within the structure of what we're looking for, which is if they're going to take it back into the uptrend, into the green zone, still viable trade for us. It's just that it's obviously very, very overbought. So the continuity might be limited, but we're only going for very small, hopefully high probability setups. So I'll look for Nasdaq to see if it kind of gives a signal. In the meantime, what we'll watch the Nasdaq on one side, and we'll watch the S&P on the other side. Here, S&P is a fade signal, meaning we're looking to sell buy it. We're also really within 10 minutes of our pause window. You know how like the Fed goes into the quiet period? We go into our quiet period, which is 9:15 to about 9:35. We usually don't want to be taking trades there because the market is opening up. It's going to be opening rotation, lots of volatility. Sometimes it works really much in our favor, sometimes it doesn't. And I just, you're doing more guesswork than you're doing trading at that point. So I try to hold off. But overall, very, very cool, right? Excuse me. It definitely gives us some very, very nice signals as far as it goes. Gold is reversing. Gold is mildly reversing, but here's the thing. Here's how I'm looking at gold, as I told you. Let's go to gold for just 1 second. I'm looking at gold right now. So gold is reversing. You're absolutely right. But really, gold to me is not a buy until and unless it clears the 200 period moving average, until it sort of reestablish. And by the way, it will do that. This is interesting. This is where I always find it fascinating how you have all of these confluent levels in instruments, where like sort of the truth that comes out usually comes out on multiple fronts. I'm kind of eyeballing the Nasdaq. If Nasdaq goes green, we'll give it a shot here. 43 seconds. I'm just eyeballing Nasdaq out of the corner of my eye. But what I was going to say is, if gold to truly be a buy, it has to really recapture the pre-news levels. That would be very bullish, because this news suggests that yields have gone up, although yields have also kind of topped out a little bit. And unless we break the 4 handle on the yields, maybe that will give gold the impetus to go higher. But overall, I got to tell you, super bullish numbers. Economy clearly still cooking on all cylinders. And everybody who's trying to short this thing, like I have been, really have had their face ripped off. And I think it's a really important lesson in, first of all, why I don't make long-term prognostications, and I don't trade my opinions. I'm going to talk about that actually a little bit later in the show. We're reading this fascinating book it's called You Can Predict Anything, and it's all about the Bayesian algorithm, which sounds very intimidating, but I'll explain to you. It's actually literally how we all think. Our whole brains are Bayesian approximation machines, and once I kind of explain it to you in normal human terms, you'll understand exactly why and how you should be trading. It all sort of comes down to looking at evidence instead of getting hung up on your opinions. Was it I forgot the Winston Churchill quote about this. Um, okay, keeping my eye out here. Quite a lot of time still, 50, 44 seconds. This really has to stay green. We're very, very quiet. We're sort of, after all this massive buy up, haven't really done much as far as movement over the last couple of minutes. Really been, like, if you look at the Nasdaq, it's 45, 10-point range against a 200-point range in the prior 30, 40 minutes. It's called, hang on, guitar. Let me pull it. Where's my phone? I'll put up. I'll find the link on Amazon and I'll send you the link. But I think it's called. Really good book. Kind of. Everything is predictable. Everything is predictable. That's another book. Oh, 10 seconds, 9 seconds. Looks like we're going to stay green. So I'm going to try to go buy market here on this. All right, buy market. Let's give it a shot. So we're looking for 51.75 on this move. Let's see if I get continuity on this trade. But it's Nasdaq, and it's born to fake me out. So don't hold your breath. But I'm trading the setup as it's designed, fully cognizant that this is Nasdaq, and I could be eating this if it doesn't work. 51.75 is a target. Okay, so this is kind of interesting. In the olden days, when I would be sort of trading just to buy sell labels, right? I would just simply say, oh, we're switching from buy to sell regime. It's probably, I'll probably just take this, as a short, or I'll wait for the follow-on trade. So sort of a, red, green, red structure. But in the current environment where I have context here, I think the much more interesting trade right now will be the reversal sell trade. So in other words, if we're going to go sell, it's going to stay red for a couple of candles. And if it goes green, I actually want to be buying that green move on the S&P. Now, mind you, it's 15 minutes before the open, so there's going to be a lot more problematic volatility against it. And I shouldn't be doing it, but whenever I have a chance to make a trade with you, I'll make it. I'm not worried about winning or losing. I'll always come back and recover my trades because I have good trading plans afterwards. As long as you're not trading large size, it's fine. I'd rather have you guys kind of visualize the trades live with me, so you get to understand the setup, even if it's not the perfect setup, right? But generally, this would be my impulse as I'm looking around here for all these trades. So if sell goes green, I actually want to be a buyer on the S&P, right? That's kind of my thought pattern here. Hope everybody understands that cleanly and clearly. So 19, 20 seconds. This is the S&P, 18, 19 seconds on the S&P. Definitely want to wait, make sure that the candle closes green. I definitely don't want to be trading green unless it closes. But I'm going to switch over to the S&P. Let's see if we can set ourselves up. All right, I'm going to buy market S&P. That's a 98.50 target against 94.50 target. We did go green. The candle did close green, and I went into the green territory. Let's see if my sell goes green against a wider, obviously positive uptrend is a good signal for us. As I said, we're in front of market open rotation, so all sorts of volatility can happen. But on a general, normal, calm background where we're not, into the market open rotation and facing lots of volatility waves, this is a really, really good setup that I like to do all the time. We'll see how it plays out. So it's a 98.50 target here. Look how tight the range. It's like everybody died before there's all this buying flow for the first 30 40, was it 30 minutes. In the first 20 minutes of the thing, everybody got excited, and then we just like died in front of the open. 15 minutes to go, and it's like nobody wants to play. Everybody's like, everybody walked off the playground. So we'll just have to be very patient with this and see how it goes. What was it? The S&P was up, like, I believe, what do we start? 8:30. It was 67. It goes 30 handles, and now in 30 handles in like 20 minutes. And now for the last 10 minutes, it's been less than one handle, or like 1.5 handles. So volatility totally compresses. All right. Okay, so hey, the S&P got done, which is cool, and the Nasdaq got done. So despite putting myself in front of the train, kind of, notice the one thing that I was doing. I think this is such a interesting, simple, easy insight in terms of trading plan. I was trading to the good of the black line, meaning that I was trading up. We were above the black line. We're up. We're basically in a longer term uptrend, right? And I was taking the stronger side of that proposition. Now, does that always work? Of course it doesn't, because let me tell you, if you have a situation where everybody gets excited, and then some other piece of news comes out which we cannot anticipate and cannot in any way, shape, or form imagine, and everybody decides, oh no, all this good news is actually bad news. Well, then every buy trade within this segment is actually going to fail, right? And so you will get in a situation. That's why trading is always a matter of probability. You will get into scenarios where this doesn't work, where trading on the bigger side of the trend, especially when you're very, very high up, and maybe people are on the wrong footed, they're just going to start selling everything as fast as they can. But two things are going to happen. First of all, if they're going to be selling this stuff, most of the trades, most of the price action is going to be red, so you're going to be already not participating. But even if you get a pause and a green pause to the upside, okay, it'll be a one failure, maybe at worst a two failure. In other words, one or two trades that are going to work. Eventually, the markets are going to settle into the right condition. And for the most part, when you're trading on the right side of the longer term average, you're trading on the right condition. So what's happening is that all of these shorter term signals are amplifying the longer term impulse, and that's what we're trying to trade. The amplification of long term risk, because that creates multiple higher probabilities for our structure, right? It took a while, it was this, but I wasn't picking tops. I wasn't trying to fade big moves. I stood my ground to the longer trade, and that all worked out nicely to the upside. Kathy just put up interesting thing that she's giving away. So she says $25,000 challenge purchase using our discount code will get you a month free of her zip indicator. Wow. And my gold indicator. Okay. Nice of her to give away my gold indicator. No, I'm just kidding. It's fine. You can definitely take my gold indicator. But I'll tell you what's really cool about that offer that she's putting up. So, if you're right now, we're all trading futures, right? And next week, I'm actually going to add the Think Capital account to our trade rotation. I'm going to try to trade the CFDs with you as well. Now, remember, you can trade CFDs just as easily as you can trade futures with my indicators. But the one advantage of trading Forex CFDs as a prop account is you can also trade Kathy's zip signals, and that will give you a lot more really interesting prop opportunities to pass the prop opportunities that's going on, right? But from our corner of the world right now, we are just grubbing away on our future side, and trying to do the best we can on clipping points. We got about 10 minutes before the market starts. So we're not going to take any more trades right now before the market open. Let me just check one thing, guys. Bear with me a second. I got to look at my screen because I'm in JERS today, so I actually have like more screens at my discretion, and I'm able to this. Yeah, Kay is telling me this is my free gold. No, I'm just kidding her. I know it's my free gold indicator. It's a good one. So two things that we got a little time. Let's chill out. I want to talk strategies. I want to talk about this book. Let me actually just find the book for you, and I'm gonna. It's on Amazon. I'm going to give you the link. Really worth reading because it's all about decision making, and trading is really all about decision making, right? So what is this called? Everything is predictable. Everything is predictable. There it is. Right. How Bayesian. So this is the book. I have it on Audible because I literally can't read anymore. I'm gonna put this link for you guys in the. Is this too long a link? Oh fuck! Where is the short link? Somebody told me about this. Somebody told me there was a short link, right? Oh, copy link. Here it is. Okay. I always forget this stupid Amazon links. Let me see if I can do this. There it goes. Here's the short link to you guys. All right, this is the short link to the book. Really good book. British guy, has a very dry sense of humor. I like how he talks about it. So his whole thing is essentially you have an opinion, right? Then you have new facts. And if you don't update your opinion based upon new facts, you're a fucking moron. Now, I mean, that's not what he says, but that's what you are in real life and in trading, which is just a copy of real life. So a good example of how this works is, I had an opinion that the economy is starting to crater, that we're starting to, slow down, that jobs are getting hard to find, that I think we're going to see more slowdown, right? I've been having that opinion for the last 2 months, right? Now, what's happened? Non-farm payrolls come out, they print strong. Average hourly earnings print strong. If I don't update my opinion, if I remain stubborn and adamant, like, no, we're going into a recession tomorrow, I am a freaking moron, right? And it's the same thing with trading. You think the stock market should crash, but the stock market keeps going up. If you don't update your opinion and trade to the new evidence, you have nobody but yourself to blame for your stupidity. So my point is, because we're trading on a super short-term time frame, right? We take away a lot of, so Nasdaq scalp sell. Okay, so this is actually interesting. So again, we have a Nasdaq scalp sell. Now we're not going to take this trade because it's 9:15 in the morning and it's before the market open. But assuming it wasn't, this sets up the exact same thing that I talked about in the S&P, the sell by reversal. You are a sell label well above the in an uptrend, which means that this is most likely actually a great reversal signal to the upside, not a continuity signal, right? The longer term line gives you context, and context is very important because within context, everything in life and everything in trading can either be good or bad. So moving average crossover could work great if you're at the beginning of a trend, and moving average crossover could be the great reversal signal if you're at the end of a trend. And people always go, well, how do you know? Well, by trying to figure out where the context is, right? You obviously sometimes don't know where the context is, but this at least helps you to establish a baseline context. That's the other thing about Bayesian decision making, is that you have to have a baseline against which you are basing your judgments. So let's say if you think that average U.S. economy is $125,000 jobs per month, that's the baseline, right? And if the data comes in 254, that's a significantly better number. You should update your priors. You should update your opinions. So going back to why we like scalping and why it's so interesting, because why it naturally forces you to become a Bayesian. It naturally forces you to stay humble, is because within scalping, we don't have the luxury or the idiocy, whichever way you want to look at it, of having long-term convictions, right? The market topology changes quickly, and it And if we're following our rules, we're naturally going to change with the market topology, right? So if in the next hour this thing gives up all of its gains, right, and everybody's like, but the numbers were great, we should be rallying, and the market ends up, you know, down 2% instead of up 2%, you're not going to give a shit. You're not going to be sitting here holding on to your old priors, your old beliefs, because you're going to be reacting on a shorter term time frame to the actual developments in the market. That's what makes scalping so good in terms of keeping you hopefully on the right side of the flow, because that's what it's all about. It's being on the right side of the flow, right? And I think, you know, I thought that was kind of really, really interesting. Now, the other thing I wanted to show you is actually a tactical thing. We got about 5 minutes, so I'm going to ignore all these signals. Let me see if I can, if this worked yesterday. I honestly don't know, but I really want to show this to you, because this is for those of you who like, Boris, I love you, but 25 trades a day is total bullshit. I want to do one. I want to do one fucking trade a day. So this is how we can use our indicator for what I would call, you know, one trade a day. And yesterday was, God, Jesus, what a I was in synagogue, so I thank God I did not trade this choppy ass price action. But here's sort of like, you know, my thought about this one trade a day reversal signal. Generally, on most days, and again, it's always general. It's never absolute. You will create some sort of a trend, either an uptrend or a downtrend, between 9 and 11:30, right? And then, and this is where this is where it gets really, really cool. And then, right, you will always get some, not always, but generally, some kind of a reversal signal. And that reversal signal is good not for 5 or 10 or 20, but, you know, 30, 40, 50 points of Nasdaq, like a significant reversal signal, because it's a reversal signal of a larger move in the trend. And that generally happens between 11:30 and, let's say, 1300 New York. So if we had a strong up day or strong down day, sometimes things will reverse, and then, you know, the market will actually start to go the other way for the rest of the afternoon. So that reversal signal can be picked up with nothing more complex than just you know, moving average crossovers of the short term against the long term during this time frame. So yesterday the markets were generally up, right, more or less up. You know, most, if you look at it, it was actually mostly up till about 11:12, and then once it started to lose, once the crossover happened, right, the trade here, even if you just simply use nothing more complex than like 30-point target, 30-point stop, boom, you're done. The trade is done. Super clean on Nasdaq. So this is Thursday. Let's go back to Wednesday. I want to, you know, again, I haven't looked at any of this, but I saw the pattern. I kind of really wanted to share with you because it's so simple and so elegant as far as, you know, things going on. Okay, so in this particular case, we don't really have a reverse. So the reversal happens at around 10 o'clock, and then we basically just hold bid. Now this is okay. Yeah, this again proves my point. So we're holding bid for 2 or 3 hours. We're up, right? We're up. Then around 12:30, we get that reversal signal. So I'm short 06, 07. Let's say I'm short 07. 37 is my stop. I'm targeting 77. It goes all the way down to 70. Nice, clean. It actually goes all the way down to 66, right? 30 points. 30 points on Nasdaq is $600 on one contract. So you do $600, you know, risk, $600 reward. You don't need more than, if you're trading a $50,000 account, you need to make $3,000. It's 5 winning trades. So in 10 days, you could easily get yourself funded with just one single trade at around this particular time when you get the change of trend. Just sort of very, very cool, very, very simple, super simple. But the key thing, again, you need to know context. You need to understand timing, and you need to understand how the markets generally are moving. There's always, so this was Wednesday. Let's go to Tuesday, sort of like one more look at this before the market is going to start. So we'll go back to scalping. Okay, yeah. So sort of similar idea. Look, same idea. So here it took a little bit longer. Like, and again, as I said, it's a general rule, and the rule only works once you get the crossover, right? Once you get the crossover. So here we had just basically selling, no crossover at around fully an hour after kind of our general time. But look at 12:30, it took about 13:30, but then it crossed over. This was much more than 30. This was like 100 points of the upside, and very little heat, very little retrace against you, right? So yeah, like 3 days here of $600 days on one contract, $50,000 you get funded in a week doing this. Super easy, super simple structure, and it just kind of shows you how using our stuff opens up your opens up your world to a whole bunch of interesting possibilities. Now again, in this case, the reversal sell worked. Here I'm sort of sell zone, market open 9:30. If I get a green move here, in other words, price moves into the green zone, I'll probably take it. Why not? Even though it's not a perfect trade for me because it's just a lot of volatility. But what the fuck? Let's play. We're not here to philosophize. We're here to trade. But I need to see. You get the idea. We're above the long-term trend already, and we're getting massive sell-offs here into the open. Typical kind of square positioning because they brought it back up in the NFPs. I honestly, again, I'm going to offer my opinion, and after I'm telling you how useless my opinions are, right, and how they're just basically my own prejudice and guesses. But I wouldn't be surprised. Like I would not be surprised if the market actually ends down on this thing. Like good news, and we sell off in the good news. My friend Jason Shapiro, who, by the way, I'm going to have as a guest at my Trader Fest coming up in November. We're going to have a big event. I'll tell you all about it later because we haven't started promoting it yet. He has, his whole idea is, his whole setup is when news is super good and the market ends up super bad, that's a good reversal signal. That means everybody who's bought is bought out. And it works really well for him. He's been managing money on that signal for years. I wonder if today is going to be one of those days. I'm always looking for those kind of days. Nguyen is saying tonight is a big win for us. How do you mean is a big win? What do you mean by that? So anyways, what is it? 9:32 market open, waiting patiently here. Nothing is obviously setting up. I did have a sell signal in YM. That's interesting. Oh, and this is why I'm glad I didn't take this trade. It may have worked. I don't know. Was it 62? Maybe it would have worked. It's just, you see the volatility here in the first 5 minutes. You see I just dropped some pops. But if you were trading YM, right, so sort of show you, again, same idea. It's a reversal buy. And, here it kind of got a little bit better where, you had a sell signal. It went green. You got long here. You would have been made whole on this trade. I just, YM is my third or my fourth instrument that I want to trade. So I'm kind of looking for more signals here. Now, the classic signal that I usually like to take is sell, follow on, right? By the way, this is a good example where this would have really not worked. And this is exactly why the new methodology of context, I think, is so good. So in the olden days, I would just be like, let's just trade buy, sell signals, only labels, no context. So here's a sell signal, first sell signal after lots of buys. If I do the follow-on trade over here, 97, right? Boom, I actually get stopped out, -3. No continuity. Why? Well, because this thing is well above the uptrend, right? Now on the second follow-on, it would have resolved it, and that's also part of my plan. Is like if the first trade doesn't work, try the second trade. And obviously we have a little bit of a move to the downside here too. But generally, once you're here, you're playing defense already, right? Your first trade, your offensive trade didn't work, and you're trying to do repair trades, trading defense. And the less defense you need to play, the greater your chances of winning, right? That's the whole point. The best defense is a great offense. So no need to take a trade in a not me take a sell trade in this move, right? All right, so this now possibly is staying green. Now again, this is Nasdaq. I get it's like my smoking warning. It's like my cancer warning. You're trading Nasdaq, prepare to fail. But we'll give it a shot. If this thing kind of holds, we will give it a shot here because this is a reversal sell buy. Sell in the uptrend against the buy, but it's got to hold. We'll see if the zone holds. I could have taken the second move here, and that would have worked on the S&P. But remember, I just was. We already took that first move of the sell, so usually I want to have a second sell label before I do this. So 5-6 seconds. All right, let's try this. Target is 29.50, and I got done. And it's a good example of like, okay, don't be a pussy about it. Take the trade, and it worked. So there's a nice clear. That was $100 in less than 1 second, right? Just to let you know. So again, have a trade, have a plan, trade the plan, know what you're doing, get in there. So yeah, I guess you guys, I hope you guys really like the sell reversal idea, or the buy reversal, sort of like the opposite, the George Costanza trade within a larger sense. This actually also brings up gold, right? A lot of people were asking me, how do I want to trade gold? So I just didn't have a chance to follow gold, but this would be the buy reversal trade. So in gold, you would have been short here at 67.6. Very tight stops today, so I have no idea if this would have worked. Jesus Christ, this is so. I did go down, yeah. Wait, 67.6, yeah, for 5 points. This would have done it. I could have made it, but there's just lots of volatility. Not my cup of tea. I think gold on a day like today where there's just so much volatility, we're trading with a 0.5 stop target. Really forces you sometimes to double or triple trade. But let's imagine I traded this, I got stopped out. I would have had the second entry over here, and that would have been done over here. So yes, the first move would have worked probably, but even if it didn't, I had a good defensive follow up on the second move. Now we're starting to give up the move. Now it's all interesting on if we're looking on the equities. The equities are kind of getting close. Well, not Nasdaq. Nasdaq is still considerably up, but S&P kind of getting close. Back to giving up its trade. So, Adam, you bought the book. All right, I'll let the author know. He's doing a good job. Oh, so the other thing I want to tell you guys, and this is something that I'm sure a lot of you will enjoy. There are many of you who love, day trading, love scalping with me, love doing all this stuff, and it's great. But there's many of you who just don't have the time, or maybe want to do something alternative where you want the robot to trade for you, right? And you guys know that I have been, working on my robot system for as long as you can possibly find it. And tomorrow I'm going to be doing a webinar, a completely free webinar. Let me give you the link. The robot trades better than you. And this is kind of the second version of my system that has just been gangbusters. I'm so happy with it. I've been feeding the robot trades into our Discord, right? So let me just hold on a second. Let me just see if I can share it with you. Okay, hold on. Let me just. I just want to find it within my thing because I want to show you how well it's been trading. Sorry, just give me a second here, guys. ODP trades. Okay, yeah, it's just 1 second. One more second here, guys. I'm going to copy this duplicate. Okay. There we go. Okay, I'm going to bring this to the screen for a second. So the robot I've been feeding into into our Discord, and you can see, guys are like, very give me, high fives on the moves. But it trades 4 things: gold, German, Nasdaq, and US30. And this version that's trading right now is not even the latest version. The latest version is even better than this version. But this is like, there was version 1, version 2, version 3. This is version 2 that I've been trading, but it's been doing great. It's been like literally picking up $800 every day, 5 days a week, right? Without getting stopped out. It's just been mint. Now it's obviously going to get stopped out, and it's, you're going to eat the losses. But what I'm trying to do here with the automated system is get to a point where hopefully I'm getting stopped out once every 2 weeks, so that my net P&L just grows and grows and grows, because I can afford to get stopped out once a week and still make money. But if I get stopped out once every 2 weeks, I'm making bundles of money. It's based upon the idea of very, very consistent profits with occasionally large losses. But those large losses are all contained, and they're all contained generally within the overall profits. Just to give you sort of the mathematics, we're looking to make 4,000 a week with a no more than a 3,000 loss. It's a net 1,000. And if I'm doing 2 weeks, then you're looking 8,000 against 3,000 plus 5,000. That's the rule set in an incredibly steady manner. And if you can scale it up and down to 400 against 800 versus 8,000, $8 versus you can go down to a dollar size. But what it is, the whole point is the system trades for you. It's all automated. It's really beautiful. It requires very little effort on my part, and I love building the P&L consistently. So that's going to be the I put the link in there, right? Did I put the link in there? Yeah. So I put the link in there. Come join me tomorrow. Hopefully you guys will really like it as a trade. Where am I now? Where's my signals? Okay, here we go. More buy side signals right now as market's kind of settling in 945. Can you use my auto trader on the prop account? So the answer on Apex is no. You can't use it on Apex. I don't know, honestly, what the policy on Think is, but it may be possible. It's designed. This thing is designed to trade CFD products much more than it is. It can trade futures, but it's designed to trade CFD products. So CFD Forex prop firms. This is obviously a very good product for it, but it's not. It's not designed to help you trade past the prop. You got to work. Prop firms. Aren't about like, oh, here's Boris made this robot. I want you to use this robot. I'm going to pay you money. No, they're not. They usually generally flag automated trading because they want to see you actually trade and have your own skill set. But you have your own account. It's awesome, and there may be I don't know honestly. So it may very well be that Think would be totally cool with it. I know some prop firms are like, hey, we're totally cool with you passing the prop test, but then when you go into the funded category, you have to trade for yourself, which is another thing to do. But for Apex is very much a trader's firm, and they want you to trade. So that's where things go. Somebody was saying, Andy was saying to me that gold was a buy. Where was gold a buy? The gold, I didn't see gold being a buy. You gave us a buy signal, right? But the buy signal is still underneath the moving average. And remember when I talked about confluence, that like gold really needs to clear that, if gold clears 76, that's very bullish, very bullish gold, right? That's like, gold shrugging off all of this negative gold news, which is the yields going up and, continuing to go. But I don't think so. Right now, gold is telling you is that so far it's a negative trade until proven otherwise. And that's, by the way, again, not my newly enamored love of Bayes and his algorithm, but you will understand, by the way, just so you understand why this is such an interesting subject matter. All of artificial intelligence, literally everything that you do with ChatGPT and Claude and whatever the fuck Google's stupid AI is, which is really horrible, they all use the Bayes algorithm to make decisions. And it's pretty good, right? So that's why, and I thought it was just kind of a really important idea to bring up. And then I totally forgot and the key thing with Bayes' algorithm is you have to have a baseline notion, right? Baseline notion. So if you think of the 200 SMA as your baseline of like, are things good? Are things bad? That's my baseline. And then, I have more evidence, prices rising. That gives me higher confidence that things are getting better. Prices falling. My confidence that the trend, is going to stay up is falling. Really, really good way of thinking about it, right? It kind of eliminates, first of all, it eliminates anger because you realize, what are you getting angry about? The data is changing. All you can do is try to predict data. Oh, the other cool thing about this is that this is literally how we are biologically wired. Like our whole brain. It's fascinating in the book, and this is not the only book where I read this. I read this in a lot of psychology books. I bet you guys don't know this, but we don't see reality as human beings. We don't actually see trees. We don't see swimming pools. We don't see computer screens. We don't see any of that shit. We see like literally 1/110th of a billionth of that fragment into our eyes, and then our brain fills in the picture. That's why optical illusions work so much, because optical illusions are all about our brain filling in and guessing forward the prior information that we have. So we as human beings are essentially nothing but Bayesian computation machines. It would be so overwhelming to see every bit of data, every photon that hits our eye, all the granularity that comes around in our world. We don't see any of it. We are just basically guessing on limited amount of information, and then if the information changes, we update our guesses. That's why people who have really good reaction time and instance times, the great athletes, for example, what they are really, really good at is their brains are absolutely great at reconfiguring mid action to guess better, to basically guess better, to adjust their jump shot, to adjust your swing, to adjust your pitch. It's all about guessing forward. We are guessing machines, which is why, by the way, what makes trading is like the ultimate guessing game, right? That's what makes it so interesting, cool. Once you understand that, you kind of lose a lot of the emotional aspect of it, and you can start to really focus on what makes it work. In the context of Israel versus Iran, would I go long this weekend? If not, would you expect closing positions before the European Open? Well, I'm always flat. I always go flat. I never hold over the weekend because, again, why guess? Generally 99% out of 100 times, nothing happens. But then Israel could blow up the whole nuclear reactor of Iran, which I'm frankly rooting for. But the point is that would create a huge amount of volatility. So there's no real reason to do this. If things are good, they'll be good on Monday. If things are bad, you have a lot of downside, right? Now you can do the flip side. You could say, "Oh, I'm betting on the end of the world." Okay, so if you're correct, you're going to make out big. If you're incorrect and the end of the world doesn't happen, what's your downside? Well, the market may open up 0.5% up. Okay, it's not like the market is going to open up 10% against you. It's not like everybody's going to just say, "Oh, all world problems are saved. World peace is here. We have infinite energy. Let's buy the world." Right? That's unlikely. So when you're thinking about these kind of trades, where's the asymmetry? Where's the much better probability payoff? Definitely on the downside rather than the upside right now, right? How do you get the updated scalper? Just simply download it. You can delete the old one, download the new one, or if you just simply download the new one, it will automatically update into your charts. But the easiest, or like the cleanest way to do this is just delete this, download it from the link that you have, and then apply it back, and it will say 1.9. If it says 1.9, you have the latest version. Again, if you guys want to try it, here's the link. If you guys want to try Apex, which is still giving massive discounts, and I'm trading their $250,000 account, I'm up to 256.5 on this. Doing this, just basically, just chilling against my baselines, only taking trades in the direction of my baselines, not trading every single label there is, and kind of picking and choosing, and then being very, very defensive. If I get it wrong, I look for the next opportunity to repair myself, right? That's been very, very steady. I think I showed I did like $2,000 over the last 2 days. Yesterday, obviously, I was not vacation, but it was Jewish holiday, Jewish New Year, so I was gone. Today might be a little bit of a quiet day, but I'm feeling pretty good that I think it's reasonable. Maybe we'll, knock wood, we can get one of these things funded relatively soon, and then we'll have like 6 or 7 funded accounts, and we can really trade them well. So it'll be really good. So just watching, it's typical non-farm payrolls Friday. And by the way, what I love about this is that usually I'm dicking around doing 1,000 stupid trades because I'm trying to guess the next move. And usually on non-farm payrolls, nothing happens in the first half hour. As a matter of fact, sometimes the day is kind of dead, right? All the news happens in the half hour and everybody kind of goes to sleep. So you're watching me now. I don't have any signals. I don't have any, I don't have everything is against my context. I'm just doing nothing, which is the exact same thing I should be doing, which is the beauty of kind of redoing this is I'm basically doing what I should be doing, which is nothing, right? Just hanging out, twiddling my thumbs. Yeah, that's basically it. I'm just putzing around. So, any questions? Should we do a little bit of let's do a couple of polls while we're watching around. Let's see what everybody wants to do. You guys, you brought up geopolitics. Let's do a poll. I'm actually curious because you guys have actually been very good on calling. You called the non-farm payrolls being better. Let's see. Okay, let's see. Let's do a geopolitics. Will Israel bomb Iran this weekend? It's a simple yes or no. I mean, I'm just curious. Just a binary question. Curious how everybody's feeling about it. Go ahead, guys. Let's vote. Let me know. Oh, and while this is going on, let me see if I can pull this up. I think I can actually show. See if I can do this. If I go range, custom range from the 2nd to the 4th. Let's go 2nd. Is about 9. Yeah, okay. So let me show this to you. See if I can bring this up for a second. So this is like last couple of days after I did, created the baseline structure. Yeah, and it obviously quiet days, but look at the very, very clean, steady P&L after we, because 38 trades, not a lot of trade, not a huge amount of trades. Really good comms to gross P&L. I had comms where it was like all of my P&L was eaten up by commissions. So here I'm not really eating a lot of commissions. Pretty good, really, really good flow. 85-13, which is, as good as you can get. These are all good data. Now, will it change? Oh, shit. Did I just close this up? Oh, fuck. Oh, no. That's fine. I didn't close it up. Okay. I thought I killed my trade of it. I had to restart it. It's all good data. I mean, like it's pretty, it just tells you I'm being halfway intelligent on this. Now, could we, in our old fashioned way, have gone short these cells, right? Short the cells. The answer is yes, we could have. And let's just kind of imagine if I did. So my standard protocol would have been, okay, I have a sell label. I'm going to trade the follow-on trade, right? And I'm going to be trading this on a 5-15 basis. I always do. So I would be short here on this sell zone. This is 13 and it goes up against me 29. It actually, no, 18. Yeah, and this is why. Well, maybe it would have survived it. I'm not sure. This is why, by the way, I hate Nasdaq and it's so hard to trade it. In especially if you're doing lots of trades, I would have been short here. It went up against me. It went down, went up. Would it have made my target? Maybe it would have made my target before it would stop me out. But the thing that I hate about Nasdaq is it would have stopped you out and then fallen. And it's so hard to find. Nasdaq is one of those instruments where you can be right on the direction and wrong on the execution all the time. That's why I always say you have to be very, very patient. You have to expect to lose on Nasdaq and then come back and try to trade it again. But regardless, if I was just simply doing sells against this, it would have been a difficult trade. It wouldn't have been an easy trade. And I didn't do it because it was above the moving average, right? It was the baseline was against me, right? And so let me just sort of I'm trying to my mouse is not moving. Okay. And so I didn't do it and it was good, right? Now, what would have happened with me on S&P? S&P would have been an easier trade. And S&P is always an easier trade. So, no, I take it back. S&P, this would have been the entry. So this would have stopped me out too, right? So again, I would have had been more defensive. I would have gotten stopped out on the first try. The second try would have been nice and easy and I would have been able to make it. Now S&P is negative, but it's still above the baseline. It's still above the positive move. So it's not a situation where that I want to take a short in right now. Even though obviously it's closer to the moving average, and it may be a pretty good trade, but it's now not happening. Now Nas, we totally lost the trend, and so is the S&P. Kind of totally lost the trend. Remember I told you, I wouldn't be surprised if we started to kind of sell off, maybe even turn negative. We'll see. Yeah, you want me to put the updated Discord? Bob, it's just oh God, it's hold on. Let me see if I can. I think I have it as a. SCLP. Yeah, here it is. I put the update in Discord, guys, for you guys. Okay. Okay, so now we're kind of negative, negative trend. So if we get a green, red structure, in other words, now we're below the moving average. We're going to have a little bit of a retrace move and then a red sell. I want to be selling. I want to be selling both of these. Now we have a legitimate sell set up here in our structures. So we'll have to see. We'll see how it shapes up. But but you can see tactics, techniques, structures. All of this is working much better. And the more you guys trade with me, the steadier it becomes. The easier it is to kind of understand why trading with the flow, with the most immediate trend, puts the probabilities on your side, right? Everybody feeling me on this? Let's see. Oh, look at this. Everybody's voting on this poll. Holy cow. Wow, look at this. Conventional wisdom is 75% that Israel's going to bomb Iran this weekend. And put in more votes, guys. Let me know. I'm curious. Well, we see if we can get some setups developing. Oh, I hear my dogs barking away. So any questions you guys have for me, for the weekend? Any thoughts? How's trading been going for you? Actually, you know what? We're going to end this poll. I'm going to end this poll in like 1 minute, and then we're going to do I want to do like a trading poll, what's going right, what's going wrong, what have you been doing? I'm curious. All right, so we're getting negative, starting to sell off. Let me see if there's anything on Twitter, if we're getting any news flow here. Just bonds. Nothing much. Huh. No, just nothing much going on. I think it's just regular flows. YM goes to sell. I wonder if YM is in the sell zone. No, YM is actually not in the sell zone. Look at this. YM is still in the buy zone, but now it's YM is also starting to work the sell condition. Remember we were talking about gold? We're talking about whether this gold recapture. Now gold is getting close. Gold is getting close to recapturing its uptrend, and then gold becomes an interesting buy for us, right? Gold is still struggling here, but it's definitely getting close. All right, let's see what's going on over here. Oh, yeah, so 573. Oh, Steve Kelly, I didn't notice. Look at this. See, all you guys tell me. Really? Where's the update indicator? Steve tells me that if you click the three dots, you tell me this? If I click this, oh no, three dots on the indicator. Click here. Oh, I didn't even know you could add this indicator to the entire layout. That's really cool. On the indicator tab. Oh. Okay, I'm on the indicator. Where's the three dots? I don't see this. Oh. Okay, question about Apex. If Apex is for U.S. citizens, and is that what I'm using for these trades, or do you think capital better for U.S. citizens trading in the U.S.? I'm confused about your question. I don't understand this. Oh, so if you haven't updated, that's interesting. I'm gonna try that out, Stephen. I had no idea that you could do that. Since I already updated, it doesn't show. But if you go, would it be under these? If I go over here and I go these three dots over here, it would have like an update indicator tab, like that. Is that correct? So maybe if you guys are doing that, you can actually do this. I had no idea you could do that. That's really cool. GF, I don't understand your question. Apex is not just for U.S. traders. It's for anybody. It's basically for all OECD nations. But if you're in the emerging market world, they don't take any emerging market customers. So then Think Capital is really, really a much better solution. Let me give you a link to Think Capital. Thank you, Steve. That was really cool. Next time I'll know that. I'll save myself some time. Apex is futures driven. Think Capital is CFD. That means that if you're trading CFD, you're also able to trade Forex. If you're trading futures, you really are not able to trade Forex because there's no really good Forex products on the future side. So those are considerations you want to do with yourself, right? Starting Monday, I'm trying to get myself organized with Think, and Think, as I said, for U.S. customers, Think will allow you to trade TradingView. For non-U.S. customers, I think they allow you to trade MT5. So if that's true, I'm actually going to also put in, like, we have a MT5 execution tool that I'll make available to you guys, where it will automatically do buy sells. You can configure it to all of our scalp conditions, and you could trade. You could just basically scalp CFDs using that tool, which is going to give you a really fast entry. So hopefully that clears it up for you, GF. So where do we stand here? Nasdaq pretty much underneath the 200. S&P sort of also underneath 200. Like, let's put it this way: if I have green, then it starts to go red, I'm going to be short this thing. If this thing goes red, I'm going to be short on both of them. Or at least I'm definitely going to be short S&P because that's my favorite instrument. If this goes, back up above the 200, then I have no trade. But like right now, if price kind of consolidating and decides to go, to get red again, to start selling off, I want to be short this thing because that's going to be a signal for me. Yes, they allow you to trade indices. CFD, by its very definition, does not allow you to trade futures. Okay, futures are only U.S.-based Chicago Mercantile Exchange tradable products. CFDs are indices, gold, Forex. It's every asset class that you could trade, right? You can't trade futures, right? But I will be trading. I'll be trading Think Capital. We'll have a Think Capital, account too, and you'll see executions in there. I'll be trading in both. I'm gonna execute in both. I'll probably be trading indices in both. We'll see. That'll be interesting to see how they, the parallel trade on that. On the other thing is that on indices, the trade is US30, not S&P 500. We're not going to be trading S&P 500. We're going to be trading US30. Okay. All right. So what's going on right now? We got a little bit cute with the red zone on the Nasdaq. I'm watching Nas right now. Nas goes red at the end of this candle. If it stays red, I'll be shorting this, right? Because that is my setup. Again, full disclosure, we're trading Nasdaq, so enter at your own risk. But so far, it's not setting up. We're staying, relatively buoyant. And S&P now is above the 200. Market is just kind of consolidating. There are no signals, so we don't do anything. We're just chilling like a villain. Gold sends a sell signal. We can take a look at gold just to kind of get an anchor on this, but I think gold was still underneath the zone, right? So gold is kind of failing, right? Back underneath the zone. So what the trade in gold, which we can watch now, we can actually watch gold now, is going to be green red. If it goes green red, I'm going to be selling gold because we're underneath this. We've got a sell signal. I'm happy to short this on a follow-on trade. Although look at this, I'm watching the Nasdaq, and Nasdaq is starting to break down a little bit to the downside, 18, 17, 15 seconds. So I'm watching Nas here. We will trade this if it's got to hold red. And with Nasdaq, you always have to wait for the last second to make sure that it's definitely there. Okay, selling. Okay, short Nasdaq 78.50, and we got done. See. No hesitation, get in there, get it done. So that was $100. Again, $100 less than 10 seconds. Let me show you the execution. You can see the execution, right? 83.50, 70.50, drop like a stone. Boom, boom. Now, could you have got more? Of course you could go for more. But I have a certain risk reward ratio that I want to hit, and I hit it. I'm perfectly happy with it. All right. Was that cool? Everybody like that? Look at this move. Holy shit. Look at this. It's collapsing. Now gold goes back up. Goes back up above the SMA. So now my whole sell thesis in gold does not work. Now let's go back to S&P. S&P. Ooh, it's a really, really big count. Okay. So here's what I would not do. Okay. This is a sell. It's a legit sell, but I won't do it. It definitely could have worked. And, I sort of hesitated for a second, but here's why I don't like to do the sell. This would have worked. I don't like to do these kind of sells for one simple reason. This is 76 to 66. It's a 10-point sell candle, right? My stop is only 3. I'm so within the volatility of this candle that this thing could just pop, 5 points on a quick retrace and it would have stopped me out. Although this is bullshit. I could have easily made money on the S&P. Would I have taken this trade for my, when I'm trading myself? Yes. But when you're learning the setup, you want to give yourself the best possible chance. You need to be mindful of volatility. Another input, right? This is another Bayesian input into how you want to be thinking about it. the volatility of this candle was so massive that the retrace risk, could just stop me out because my stop is like a third of the volatility candle, right? Generally, I don't want the candle to be more than 3, 4, like I don't want the candle to be more than 150% of my stop value. So, you see how that played out, but I could have made another $50 right then and there. The thing that hopefully you guys starting to see, and where it's where I'm doing a much better job with you guys today, we're up $600-700 already in live trading, and no sweat, right? You really don't. There was a little bit of sweat, around 9:15 before the market opened, where I had to hold it for about 3-4 minutes, but this has been like 10-second trades for most of them. The thing that what you're seeing though is that you're seeing me do nothing for a very long time and then do something really quickly, right? Boom, boom. That is the scalp trade. It's kill or be killed. You are the lion. This is the jungle. Snatch your prey. Kill it. You hesitate, you snooze, you lose. You hesitate, but what rhymes with hesitate? You evaporate. You hesitate, you evaporate. But when you have the setup and it does hit it, you hit the button, and then if it works so fast that I before I even closed my button, the market anticipated my my guess correctly, and I made the profit. Now imagine if you were trading just even 2 or 3 contracts. That's $300 in less than 10 seconds. Either way, it just gives you the right approach. So I just wanted to kind of point that out to you. I think we're kind of done, guys, because now it's going to take probably another 10-15 minutes for this drudgery to set up for a little bit more setups for me. And I got to go because Kay is bugging me for a meeting. But it's been it's been a great day. She did a great job with you on the first half hour. I took you through this. Let me just look up and see what the numbers were. Well, here, I'll bring this up. If we look through, if I go through just from when did we start trading? Starting trading today from, I don't know, 8 o'clock, right? 8:47, right? Today, is that right? Was this going to go? Yeah. Not bad. From 8:47, that's 3:59. Yeah, not bad. 3:59. It's 5 trades. Why is it? Oh, I know why. Is that right? It seems like little. I know I traded more. Huh. Maybe it was. Oh, because I was trading some prior. It should be from 8. Let me hang on a second. Because afterwards I was waiting. But if it was from 8 o'clock, yeah, that's 391. Okay, not bad. 425. Okay, not bad. Still got lots of the day to go, and generally, definitely good ratios, nice clean numbers. Not a lot of comms. Comms are 10% of P&L, which is where I want to be. All good, right? Hopefully you guys really liked all of that. I'll keep on trading a little bit more, but but the setups are there, and they are repeatable, and you can take them all day long. And I hope you guys really enjoy it. I'm going to put up all the links here for everything that you want to do. So you want to join us and try out my indicators, be my guest. If you want to try out Think and get, especially if you do the $25,000, I'm gonna put that into our thing. The Kathy's giving away her zip indicator for a month. I'll put that on Monday. I'll have the Think platform up on Monday. And then if you guys want to do coaching with me, it's coaching has been going great. Past the Prop Academy, it's there. Otherwise, everybody, one last thing that I want to share with you is my free webinar tomorrow, 7 o'clock New York. Let me just do this link. Everybody's welcome. This is really cool webinar. It's all about automated trading. I love the Saturday webinars because we're totally chill. There's no market action, so we can really talk about markets. And we'll see you there. So that's it, guys. Hope you guys really enjoyed. By the way, look at this. So gold. We're talking about gold is not a buy. Sell. If I was watching this would have been a great sell. Easy sneezy 50 right then and there. Super easy. Everybody have a wonderful day. I see everybody. It's been a good week. Shana Tova to everybody who is Jewish. Happy New Year, year 5785. And for everybody else, enjoy your weekend. I'll see everybody on Monday. Take care, guys.